Good morning, everyone. My name is Sriram from the Commodity Research Desk at Reliance Securities. Welcome to the weekly market updates on commodities. So, gold in both international and domestic markets tumbled on the back of dollar touching November 2022 highs. Silver too tumbled to more than 1.5 year lows, pressured by concerns about industrial demand. However, the hawkish outlook from the Fed meeting outcome continued to dominate headlines this week as well and weighed on prices. Data was mixed last week. Inflation was slightly in line expectations. GDP was slightly flattish or slightly weaker than expectations. But the non-manufacturing PMI numbers were upbeat, and that pushed the dollar to its recent highs, and that weighed on sentiments. Additionally, recent comments from the several Fed members have been hawkish and continue to push the bond yields higher, and that also weighed on the bullion markets last week. Looking ahead in the coming week or so, we see the spotlight will be on the non-farm payroll numbers this week. Again, the JOLTS job openings yesterday evening was better than expectations, and the private payroll numbers tonight is also expected to be better than what the market is expecting. So this will continue to keep the dollar elevated and keep any meaningful upside limited for gold and silver. Moreover, the long-year 10-year treasury yields touched 4.75%, and the 30-year yield also breached the 4.8% mark this week. Both are at 2007 highs, and that further uptick in the both bond yields will continue to be on the bullion markets this week. So we expect further correction for both gold and silver, but some short covering cannot be ruled out in the coming week or so. On the charts, we feel both gold and silver internationally and domestically are extremely oversold, so some covering of shorts cannot be ruled out on the charts. But we feel the range for the domestic gold December contract is anywhere between 56,200 on the lower side to 58,000 on the upside, while silver can remain in a broad trading band of 65,000 on the lower side to 70,000 on the upside of things this week. In the overseas side, we see COMEX December remaining between 1815 on the lower side to 1900 on the upside of things in the coming week or so. Moving on to the crude oil side of things, NYMEX posted small gains this week after data from EIA showed US crude oil inventories fell last week to 416 million barrels, the lowest total this year and 4% below the 5-year average. Additionally, supplies at the Cushing, Oklahoma storage hub, which is the pricing point for the WTI futures contract, also fell, dropping to 21.9 million barrels, which is the lowest since July 2022, and this propelled the markets higher initially. Of course, the fall in inventories worsened concerns about an already tight global supply in the markets after OPEC's decision to extend production cuts this year till the end of this year. So markets initially were gained further, and we see further uptick for the crude oil side of things going forward into coming week. Prices, of course, were off session highs as a threat of higher interest rates could slow down demand for the fuel, and that could keep meaningful upside limited for crude oil prices. Again, dollar remained elevated, and further uptick in the dollar will definitely be on sentiments. The key trigger will be the inventory data as usual, but the OPEC meeting is scheduled this week. However, there is no major expectation from the cartel group to announce any fresh output cuts, but any significant changes in the supply and demand outlook will be key for the markets going forward. So that will keep the markets remain elevated going forward this week as well. The official inventory data is out tonight. Yesterday, the data from API showed that inventories has witnessed another draw of 4.2 million barrels per day in the week ending September 29. So another drop in inventories will definitely push prices higher. So we see markets remaining elevated on the back of supply concerns and lower inventory numbers this week. However, some profit taking cannot be ruled out for the markets going forward in the coming week or so. On the charts, we feel markets are extremely overbought. The range, but for NYMEX November contract will be anywhere between 86.50, 86.25 on the lower side to $91 on the upside of things. Domestically, we see 7,300 on the lower side to 7,600 on the upside of things. Market could witness some consolidation this week. Finally, on the base metal side of things, copper wiped out all its gains made last week and hovered close to its lowest in 4 months, as the outlook of the hawkish Federal Reserve meeting continued to push the dollar and bond yields higher and hampered demand for the industrial metals. Renewed concerns over the financial health of the property developers in China maintained worries that the country's macroeconomic conditions remained or have yet to be bottom out. Additionally, the hawkish Fed meeting outcome continued to push the dollar and the yields higher, and that kept the market's upside limited. Additionally, rising copper stocks in LME warehouses were also a negative factor and are really a 1 year high, and that also weighed on sentiments. Looking ahead, we see that the physical activity in China will be absent this week due to the holiday in the country. So we see the downside can be worsen going forward due to the lack of any physical buying from the country. Additionally, recent rally of the dollar can also pull the prices lower further, so we cannot rule out further correction for copper and other base metals. However, we feel that when China reopens next week, some buying activity will emerge and could keep downside in check. Till that time, we see some correction, but numbers going forward till the labor market numbers specifically from the US will be the key trigger for the copper side of things this week, and that will continue to move the markets in the short term. So till that time, on the charts, we feel markets can remain range bound. The price range for this week for domestic MCX October contract is anywhere between 690 on the lower side to 715 on the upside of things. So that's it from our side. Thank you very much for watching. Have a pleasant day and a week ahead. Thank you.